Good morning, everyone. Welcome to this new venue. So I hope you enjoy it. Welcome to this meeting of the Pension Fund Panel. My name is Councillor Patrick Hall. I'm chairing this meeting this morning. In the event of an emergency and the sounding of the alarm, the emergency evacuation procedure is to leave by not the staircase because we're on the ground floor. I'm assuming it's an exit without that door. As long as you're in front of me, you should be all right. We're not expecting any fire alarms this morning. There is Wi-Fi. We've got an option. I think we've got two options on the desk in front of you. I did see one of the second floor, which apparently is a bit stronger than the church one. So, can everyone get in? Is everyone okay? Is everyone connected? Yep. Okay. Please can everyone present in the meeting ensure that their mobile phones are switched off or in a silent mode for the duration of this meeting. Finally, members are reminded that charging points have been made available to assist with any battery life of laptops. These are on the trip hazards in front of you, so hopefully we will not be suffering from them. I will now ask members of the committee present. Sorry, Kevin.
Alex, do we need to switch on the mics to speak? Yes. You do need to speak into the mics. Okay, so we need to turn the mics on to speak.
Thank you. I will now ask members of the committee present to introduce themselves for the benefit of the public, starting from my left.
Thank you, Chair. My name is Councillor Mark Bainan. I am Vice Chair of the Pension Panel.
Farshid Sadr Hashemi, Kingston Gate.
Councillor Richard Thorpe, Motspur Park and Old Malden East.
Morning. My name is Garen Ravian. I'm representing Unison. Oops, sorry. Morning, I'm Garen Ravian. I'm representing Unison.
Leslie Diston, Kingston University.
Chris Coke, I represent the retired pensioners at RBK, so it's the former member of staffs who have retired.
Thank you. We also have a number of officers here present. If I could take the intro from Kevin to my right.
Kevin Jones, Democratic Services.
Sue Curden, Executive Director of Corporate Services and the Council's 151 Officer.
Rachel Howard, Assistant Director of Finance.
Catherine Gray, Pensions, Finance and Investments Manager.
Andrew Mayers, I look after the pension investments for Sutton and Kingston.
Marion George, your Independent Investment Advisor.
Sandy Dixon from Mercer, Investment Consultant to the Fund.
Thank you, everyone. Do we have received any apologies today, Kevin?
We have apologies from Councillor Holt.
Thank you. Members are asked to declare any disclosable pecuniary interests or any other registrable or non-registrable interests relevant to the items on this agenda. Do members have any declarations of interest? No. Can I take that as unanimous no?
Yep.
Thank you. Can we confirm the minutes of the meeting held on the 28th of February 2024 as a correct record?
Agreed.
Agreed. Okay. Kevin, do you want me to sign these now?
Please.
Yeah.
It's the 20th.
Confirm those are no signed. The next item on the agenda is item 4, the Pension Administration Performance Update, which you can find at Annex A of your agenda pack. This report provides an update on the key administration activities of the Shared Pension Administration Service. I'd therefore like to invite Rachel to introduce this item.
Thank you, Chair. Good morning, everyone. So the report at Appendix A provides an update on the Pensions Administration Service performance. particularly highlights performance in benefits processing, where the number of outstanding processes has fallen from 1,965 when we last reported to the panel to 1,883 at the date this report was pulled together. So pleased to say progress is being made in reducing that backlog. As set out in paragraph 2 in relation to that backlog, the majority of those backlog processes are relating to transfers in or out that accumulated whilst government factor changes were being implemented, so that was kind of circumstances beyond our control. The only other kind of key thing I wanted to pull out of the report really is we have within the service introduced a new method of work allocation to try and address the backlog. Really ensure that those highest priority cases are allocated and we make good progress with meeting those KPI deadlines, and that's so far working really well. So rather than the system kind of automatically assigning cases to individual officers, we're doing that in a slightly more manual way, but in a way that ensures that we tackle those highest priority cases. So those are only the only really key points I wanted to bring out of the report, but obviously happy to take any questions.
Councillor Sada Hashimi.
Sorry, going to the benefits processing performance data, you have 21 joiners, but there's 122 transfer in. Can you explain that?
Sorry, so a joiner is someone that would be coming new into the scheme, not been in the local government pension scheme before, and joining the scheme. A transfer in would be someone that's maybe worked in another local authority and is transferring their benefits to be combined with their service at Kingston.
Any more questions from the panel? I had one, if I may, Rachel. Good news on the progress. You probably hate this question, because I hate the question when I get it in my day job. Benchmark targets to be completely up to date. Just as an indicative position for the panel, when would you hope to have everything cleared?
It's not something I can put a date on at this point in time. We're obviously monitoring it. The backlog is coming down. The work kind of after all the year-end employer returns come in does create then a kind of another batch of activity as kind of new joiners and leavers are identified through that process. So we're continuing to work on it, but I'm afraid I can't put a date on that for the panel at this stage. We'll obviously continue to report progress to you, and hopefully we'll continue to see that downward trend.
Thank you. Would it be your expectation, though, we should see considerable further reduction over the remaining part of the financial year?
That would certainly be my aim.
Thank you. Yeah, Councillor Bingham.
Thank you, Chair. So I understand Nick Weaver's leaving, or has left, who could come in he was interim. Obviously, admin, I've come in for a full role, but he was in charge of the admin side of things. It seemed, for the brief time he was here and the brief conversations I had, he had kind of good plans and ideas as to what we could do, because it's been a persistent problem in terms of some of the stats and getting the admin under control for lots of reasons and staffing and etc. But just wondering how that might affect things and whether you think you've learned, it's just having here for a bit, we've learned process and we've got ideas that we're going to continue in terms of continuing with this kind of recent momentum of getting the workflows under control.
Yeah.
And also how we're getting, while you're on that as well, in terms of replacing, in terms of getting people to replace him.
So the work Nick set in train the time he was here is continuing. So the work allocation that I referred to is one of those kind of strands of work, making sure that we can really focus on our performance, and some other kind of tweaks to how the team are operating and structured. And they continue to work well, and we will continue to push that change to make sure we've got a really positive culture within the team and that performance is really kind of a high priority. We are going through the process of trying to recruit to another interim to cover that role, and we can only recruit on an interim basis at the moment because the permanent post holder is on secondment, so it's not a permanent vacancy. Unfortunately, an offer we made has not accepted, so we're kind of back to having to rearrange some further interviews, but we are progressing that as quickly as possible to make sure we have got the right capacity there in that head of service role.
Yeah, so actually on that, since you mentioned, it is an interim position we're recruiting for, do you find that might be a bit of an issue? And obviously, I guess I've been afraid a few months have gone, so it's quite a short-term position, and if we don't recruit someone in a couple of months, could we be left without anyone in place, do you think, for a while?
So we should have clarity in the next month or two as to as to the substantive post holder and their longer-term plans and whether they'll be retained for that substantive post. So that will give us an idea as to what we can do and enable us to progress any permanent recruitment if we need to, or if that person is coming back to their substantive post. So we should have clarity on that fairly soon, but we will progress with interim work in the meantime. It can be tricky in terms of the duration of the contract and whether that's attractive to people. Obviously, the shorter it gets, the less attractive it becomes. But we have got people in place within the team and support from myself to ensure that they're continuing to progress the priority work in the meantime.
Any more questions? Yes, Leslie.
Can I just ask, with obviously this overdue schedule, does it ever result in new retirees not receiving their pension on their retirement date?
I couldn't say it never results in that. I don't have the data to be able to say for certain. There's a lot of factors involved in ensuring that that payments are progressed as quickly as possible. I think when someone is retiring, we need the final pay data from the employer before their pension can be processed. So it's not always, if someone retires mid-month and gets paid at the end of that month, we're not going to have that data from that employer until that pay date has been processed. So there is then work to do to ensure that pensions can be drawn within this period after that. But retirements are one of our top priority processes to make sure that those people retiring do get their pensions paid as quickly as possible.
Thank you, Leslie. Just in my experience, I thought it's probably quite rare because we'd probably all hear about it. I'm sure it does happen, but in my experience, it's quite exceptional, and it's normally quite complicated cases with all kinds of stuff. But I'm only aware of one case, I think, in nearly 40 years where there's been an issue. So I think hopefully we're covered. And I would expect if there was a major issue, that would come to this panel. We'd need to know about it, wouldn't we? And officers would need to know about it. So yeah, I think we'd be pretty confident in what you do, Rachel. Thank you. If there are no further questions, I look around smilingly. Can I ask the panel to ask everyone to note the update from Rachel?
Yep, noted. Thank you.
The next item on the agenda is item 5, the Pension Administration Projects Update report, which you can find at Annex B on your agenda. The report provides an update on the key projects of the Shared Pension Administration Service. Again, I'd like to invite Rachel to introduce this item.
Thank you, Chair. So this report at Appendix B provides an update on the key projects, as you say. So one of the key things has been the annual returns that are due from employers, and they were due by the 10th of May. So set out in the report, we had 51 of the 58 expected by the deadline, 53 at the time of writing. I've had a check in this morning, and as of today, there's just 2 still outstanding from 2 academy schools where their payroll providers are reporting technical difficulties in submitting those returns, but they are continuing to be chased on a very regular basis. The annual pensions increase that was due in April was applied to pensions, so that was effective and worked really well this year. Work is ongoing on the pensions dashboards, and we will be required to have that in place by the 31st of October 2025. McLeod remedy is also in place, and so we are compliant with that new legislation in that respect. Going forward, team kind of next big priority task after processing the annual returns will be focusing on annual benefit statements, which need to be produced by the 31st of August, as well as kind of some early preparation for next year's triennial evaluation. So there's lots of busy things coming up as well. So obviously a number of other things set out in the report, but they were kind of key things I wanted to highlight. And again, happy to take any questions.
Thank you, Rachel. Any questions from the panel? Richard.
Paragraph 5, you say that the P60s haven't yet been issued to scheme members. Has that been done now? Is that up to date?
I haven't double checked, but I can check that and confirm back to the panel in writing.
Thanks.
Thank you, Richard. Councillor Thorpe, I should say. Unless there are any more questions, can I just ask the panel to note the update from Rachel?
Noted.
Thank you. The next item on the agenda is item 6, the Governance and Risk Update Report, which you can find at Annex C on your agenda. This report provides an update on the key governance activities and to review the fund's risk register. If I may invite Rachel to introduce this item.
Thank you, Chair. So this report sets out an update on the key governance issues and an update on the fund's risk register. So the risks are reviewed on a regular basis. You can see in paragraph 3 some changes to some of the risk scoring within the annex that's set out. But there's no kind of changes in any of the RAG status as a result of those amendments, so they're fairly kind of minor changes in the scoring at this time. You will recall at the last panel meeting, a risk had been added to the risk register in relation to ill health retirement strain costs. And so there's a brief update in paragraph 4, so it's an issue we are kind of continuing to work with the actuaries on to explore alternative options to fund this strain cost. With the intention being that this would revert to being picked up by the fund through contribution rates rather than as a direct cost to employers at the point ill health retirement is granted. But we do need to do further work with the actuaries just to make sure we understand that fully and are able to update the funding strategy statement and understand the impact on employer contributions going forward. So we will propose to bring a further update on that with any necessary changes that would need to be approved to the next panel meeting. But in the meantime, any employers that do experience ill health retirements within their teams are not being directly charged for that strain cost pending any kind of formal change to the funding strategy statement in relation to that. There was nothing else in the report that I particularly wanted to highlight to the panel, but again, happy to take questions.
Thank you, Rachel. Any questions from the panel? Councillor Thorpe.
Got to find where my question was. Yeah, paragraph 2. The risk register is formally reviewed every quarter. Who undertakes the review? Is that internal?
So that's officers within the pensions administration team and pensions investments team, and because it covers both sides, and be reviewed by myself in that.
Oh, blast, I keep losing these things. Ill health retirement strain costs, is that what I used to call permanent health insurance?
I'm not sure if I explain it. So when a member of the scheme is given ill health retirement, there are certain tiers of ill health retirement and certain requirements that have to be met for those for an individual to be granted ill health retirement. And obviously, when that happens, it results in the fund having to pay someone's pension earlier than you would normally have expected, because the expectation is that person would not be able to continue to work. So because that's an additional cost to the fund, there's a what's known as a strain cost, because it's an additional cost to the fund. You wouldn't have expected to pay that person's pension as early as you're going to be. Similarly to if someone gets early retirement with through redundancy, similar kind of principle to how that's worked through. So it's just looking at the cost to the fund of that paying pension earlier than would be otherwise.
I'm slightly surprised you can't get it insured. It sounds like something that would be dead easy to insure.
That was the theory. It hasn't proved quite as accurate as had been anticipated.
Such life. Okay, thanks.
So on those the ill health payments, sorry, did you have a question? Okay, okay, thank you. On the ill health payments, have there been any claims since this was changed? And have we said what's happened in those situations?
So there are some that are in progress that are being kind of considered and being processed at the moment. There are never huge numbers of these cases, so we're talking a handful at most. So there are some that are in process at the moment where employers have approached us asking for the likely cost around that, and our advice has been that we are exploring alternative options, so we wouldn't expect to be charging individual employers for that at the moment, but obviously within the governance of the funds, the formality is that those employers would currently be liable, but we're trying to ensure that we can amend that through the formal process at the next panel meeting, so we're not making charges at the meantime, but there literally would be, no more than probably 2 or 3 at any one time that would happen.
If I could come back quickly on that, though, that there's being processed at the moment, so we're saying we're giving assurance that they shouldn't be, rather than they definitely won't be paying it. Are we saying that we will cover it one way or another? Well, we as in the general fund rather than individual employers. But we're not able to give that reassurance. I'm just wondering what, how it is in this kind of interim period until we get a final or new policy in place.
So because those decisions are formally governed by the funding strategy statement, I can't give a blanket assurance to someone, a blanket guarantee that we won't charge it, because until you as a panel approve a revised funding strategy statement, then we wouldn't be able to give that blanket assurance, but we've certainly advised that that's the intention, and there's been certainly no pushback. I think everyone's on board with that being the direction of travel, and we just need to work through the formalities and make sure there's no impact on individual employer contributions before we can make that recommendation to yourselves. It's not stopping anyone's ill health retirement being processed.
And that should be with the next panel meeting. You think we should have that ready to be approved? Okay, thank you.
Varsha.
I just had a question about the general code of practice. So while the majority of it, applies to the administration and the governance type functions, there is an element of training, and I was just wondering what the plans are to produce a gap analysis and then, work through wherever those gaps may be.
I think Andrew's going to help me out on that question.
Yeah, thank you. Thank you, Marion, for your question. So members may be aware that there used to be the old TPR Code 14, which the departments decided to put a pause to, and the new general code has come out. Marion is right. Most of the code focuses on pensions administration, but there's an element of investments and an element of training. Some members of this panel might be aware that 2 years ago, a gap analysis was carried out. It was done by Hymans. For the record, I think there was a balanced view from members at the time as to how it was done. I'm assuming that something similar will be done. We'll have to flush through the details, Rachel, as this is a governance element of doing that gap analysis, Marion. So that will happen. How we do it, I think, is the question mark, and we'll need to get back to the panel. But members will be aware there's continuous training that takes place as part of the SIPFOD and Hyman's toolkit, which I'd like to think that members have been doing online over the last year at least. Just moving that a little bit further, for members of the pensions board, it's mandatory for them to do that. Looking at the direction of the LGPS and the consultation and the white paper that was issued earlier this year, I wouldn't be surprised if that becomes a requirement, as in a mandatory requirement for members of the panel as well.
Varsha.
Thank you. Can I first of all do a request that everybody talks to the mic a bit more? There's so much echo going on, and I've got old ears, and I can't quite understand, and Rachel speaks very softly. So I'm worried about cybersecurity. I don't know whether you are aware, but within the last few months, NHS has been hit again. And so I see here that a revised general code of practice will be coming out. But I'm not sure we should be, and I'm fairly sure you're not, waiting for that to come out before you look at cybersecurity with your scorecards. So I was wondering whether there's any major initiatives are being taken on cybersecurity recently, or is it the same old, same old?
So apologies if you couldn't hear me before, Councillor. So in relation to cybersecurity, obviously the council is part of, the administering authority is part of the wider council in terms of our cyber processes, in terms of our IT provision. And so there's the work around cyber is a really top priority within the IT service, and their work continues. There's lots of it we obviously can't discuss in public in terms of the mitigations, and certainly the Council's Audit Committee have had specific briefings around the risks around cyber security, and there's certainly ongoing work in that area. I'm not aware of anything particularly new in terms of threats. Obviously, particularly the current period and pre-election period is an enhanced what's the word, kind of enhanced threats that we're having to monitor and respond to, so they're really focused on that. But it's a programme of work that will ongoing and will never stop because the threats continue to evolve.
I'd be worried if I was relying on the council's cybersecurity team because we are dealing with money here. So they're going to be attacking our system much harder than they would be attacking the council system. So please tell me a bit more.
So our money is held by the fund managers, so we'll obviously all have as individual bodies their own processes and systems in place to manage that. The bits that are within our control are not kind of related to actually the holding of the investments. They're managed externally. The bits that within our IT services control are with things like the documents and governance documents around that are external systems providers, and obviously the investments held by external bodies will have their own processes in place to comply with the governance that they need to and the risk level that's appropriate.
The money transfers, is that done by our systems or another system?
So if we need to transfer money to surplus cash into a new investment, that would be done through our banking system or through our BACS system, which has all the relevant kind of checks and security processes in place to do that.
Money to individual pensioners, because what these guys do, they try to get between you and the final place and change their bank account details, quite readily. I just want to make sure that we have that mindset.
Yep, so in terms of payroll that's run through the payroll system, there are key processes in place to ensure particularly, the same with staff as it is with pensioners, to ensure that there are key processes in place to validate changes of bank details and make sure that those are validated and they are requested genuinely by the individual concerned and not by a third party.
Thank you, Farsha. Thank you, Rachel. Andrew.
Yeah, Councillor, thanks. Just to add to what Rachel said, on the investment side, Rachel is correct. The money is mainly held by either the London Civ or the fund managers, and we do our due diligence on them on a regular basis. Obviously, they have their own FCA rules which they need to follow, but that's something we as officers, just to give members of the panel assurance, we take into account. And right now, we're not concerned. Separately, members will be aware that we did a cybersecurity training session as well sometime last year, and in reviewing the training with regards to the code of practice, there's no reason why we couldn't do something similar, because you are right, Councillor, that it's not just, when we say money, it's not just the money that on the investment side, it's the money that we pay out to the pensioners as well. So just those 2 points to add. Councillor Hall.
Thank you, Andrew. Do I have any more questions from the panel? No, thank you. The panel is therefore asked to note the update and the risk register. Can I take that as agreed? Agreed. Thank you. Item 7, The next item on the agenda is the Pension Administration Strategy Update Report, which you can find at Appendix D of the agenda. The report presents the revised pension administration strategy to the panel for consideration. And if I could invite Rachel again.
You'll stop hearing from me shortly. So this report sets out, as you say, the revised pensions administration strategy, and this is for approval. We have an existing pensions administration strategy in place, and we review that every 3 years as part of best practice. So this is just a revision as part of that regular cycle. And it does incorporate feedback from scheme employers who were consulted with earlier this year. It's not setting out any particular major changes at this point in time, but providing further clarity, introducing clearer breakdown responsibilities and deadlines into clear categories, having a greater focus on clear communication between the scheme employers and the administering authority. There is also a kind of wider range of charges or fines being introduced for underperforming employers, so where we don't get information back on a timely basis and have to keep chasing, so that the cost of that's not impacting on the fund as a whole, and actually those employers who are not delivering what they're required to deliver are charged accordingly for that. So as I say, not major changes at this point in time, but really focus on clarity and making sure the communication is clear. Happy to take questions.
Any questions for the panel? I just had one, Rachel. I think we mentioned penalties at the last meeting. How easy is it to impose a penalty? Or is that sort of a loaded question? I suppose the second part of that question is how easy is it to raise a penalty, but how easy is it to get the money?
I don't have any data to hand in terms of the levels of penalties we've levied and how much of that has been paid, but I can certainly get that information. I'll take that one away, and maybe I can provide some information and we can provide an update in the report to panel next time in terms of what we've levied and the collection rate against that. These are kind of larger bodies we tend to be dealing with, so the fines are not huge in the scheme of some of these bodies' finances, so they're not significant sums that would cause them financial hardship. It's really there as an incentive to ensure that they comply with the deadlines and that doesn't impact other people, but I can check in terms of the payments that we've received against those.
Okay, thank you. I think probably the issue for me and my colleagues is I think we broadly support the imposition of penalties, but obviously that has to be appropriate and proportionate, and especially if it's going to impact the fund. And I'm assuming, again, my own experience, you need to make sure this is the outcome. Really, we want compliance, don't we? Rather than getting tangled up in a great big bun fight, for want of a better word. Okay, thank you. Any more questions for anyone? No? Okay. I'll now move that the recommendations on page D of the report, which are that the panel is asked to approve the revised pension administration strategy. Do I have a seconder? Councillor Bainion, thank you. I will take the recommendations on page D1 as agreed unanimously, unless a colleague indicates they wish to proceed to a vote. Can I take that as unanimous? Okay. Agreed. Thank you, everyone. So that recommendation is agreed. The next item on the agenda is item 8, the work programme report, which you can find at Appendix E of the agenda. This report sets out the proposed programme of work for the Pension Fund panel for the next municipal year. I'd like to invite Paul Godfrey to introduce this item, but it will be Andrian instead.
Thank you, Chair. Members, this is the usual work programme which we bring every quarter to the panel. As you're aware, it's very flexible, so at member suggestions, things can be added and things can be removed. Just to highlight a few key reports that will be coming to the panel. So in September, please expect to find the draft statement of accounts and annual report to give members some confidence. It has been complete, it's produced, but obviously it needs to be audited, and to that extent, massive thanks to Catherine, Paul, and the admin team for pulling that together before the deadline. You'll also see there's responsible investment training due on the 10th of September. I'll go into a little bit more detail when we come to the next item about that. In December, it's our intention to bring the 2025 triennial valuation timetable for members' consideration. And in March next year, the item that we'll be bringing is the business plan and the budget. The other items that you find on the report are your business as usual items. I'll leave it over there, Chair, and see if there's any questions.
Thank you, Andrew. Any questions from the panel? No? Thank you. The panel is asked, therefore, to note the updated work programme for the municipal year 24-25. Next item on the agenda is the Investment Performance Report, which you can find at Appendix F of the agenda. Can members please note that Annex 3 of the report from page F47 to F53 are exempt papers. If members wish to discuss those pages, they can please let me know, as we will need to go into private session for that part of the discussion. Please can we discuss as much of this report in open session as possible. I'd now like to invite Andrian to introduce this item.
Thank you, Chair. Members, there's really 3 points I'd like to make in the public session and one in the private session. So the 3 points are as follows. This is an important performance update because it takes into account the entire year from 1st April 23 to 31st March 24. Some good news to that effect. So for the first time, the fund has hit over its 1.2 billion mark. So as of 31st March, it's worth 1.25 billion, the biggest it's ever been. But size doesn't matter. Let's look at the performance. So you'll see the quarterly performance, the 1 year, 3 year, and 5 year numbers. Happy to say over that 1 year period, we've hit 13.6% against, well, it's 2.5% over the benchmark. More importantly, the LGPS benchmark, so this is for all 89 funds, was 9.2. So for the fund to deliver just over 13%, I think is good news. You'll see a similar story over the quarter, and you'll see a similar story over the 5 year period as well. That 5 year number is important. It's around 8%. It shows that we have gone through COVID and we're still at that benchmark level. The 3 year number is some of the dregs from a transition of that investment strategy that has been taking place over that 2 year period, and hence why you'll see a little bit of underperformance. So what's driven the performance? Really, it's the equity markets.
Just while you're on it, before I forget, just those numbers, the 3 year and 5 year, they're not annualized, that's total, isn't it?
Yeah, and it's net as well.
Okay, yeah, fine, thank you. Sorry.
No problem. So the reason for the performance over the last year, our equity mandates have done well, our multi-asset credit mandates have done well, and also the bond mandate has done well. The ones that have not done as well as they could have is our property and our DGF mandates. But as members of the panel know, there's plans in place for that. That's the first point on performance. The second point I'd like to make is with regards to our funding position. So this is something we brought in new at the start of the year. It's a quarterly update. I'll use my usual caveat, just because the funding level is at 150%. It's just a position. For me, it's the cash flow that matters, which takes me on to my third point, which the report covers. You'll see a cash flow projection, and you'll see over the next kind of 2 to 3 years, the fund is predicted to go into a cash flow deficit position of anything between 1 to 2 million. But again, members, we have plans in place, our investment strategy that will ensure that that doesn't actually happen in reality. Those are the 3 points I wanted to make in public session. I'll stop over there, see if Sandy wants to add anything. We'll take some questions. If the questions tend to steer into part 2, I will politely indicate to the chair, and with members' permission, we might want to answer those questions in part 2. But I'll stop over there, Chair. Thank you.
Thanks, Andrew. Very comprehensive, and yeah, clearly the key of the pension fund is the financial position in totality, looking at assets and liabilities, and obviously the funding level is very strong, as Andrew mentioned. Clearly, within the remit or the scope of the panel is more the investment side. That's where you have the influence, change investment strategy, and clearly the long-term performance is very strong. So that 5-year 8.1%, that is per annum. So that is 8% every year over the last 5 years, which I think, as a pension fund, is very, very strong, and that'll be well in excess of the discount rates set by the actuary at previous valuations, and also for this valuation. One thing I would note is we can't rest on our laurels. Clearly, we're in a good position now, but part of that is we need to continue to get good returns going forward to maintain that strong position, because the liabilities have fallen recently, and that's on the expectation from the actuary that future investment returns are going to be, higher than he maybe anticipated a couple of years ago. So, very good position, but we can't say job done. There's a long way to go yet with this fund, but very positive. I mean, I was going to turn slightly back to sort of market, say what's happened over the last quarter, give you an update to end of yesterday of where markets are, to try and give you some sort of sense of where the assets might be. And if I may, I might get a crystal ball and say what might happen in the future, but obviously very uncertain. So, beginning of this year, I think Q1 starts 31st of December to 31st of March, which is this quarter we're looking at here. Markets, especially equities, are up quite a lot. It was really quite positive, and that was really driven by the fact that economic growth kept surprising positively. Like, everyone thought we've had very high interest rates, we're going to have a slowdown in growth. But actually, jobs are still there, especially in the US, and earnings were still strong, so there's that real positive momentum. Inflation continues to come down, but it's probably slightly stubbornly high in some places, although the recent CPI print for the UK came in at 2% the other day. Bank of England's meeting as we speak, not expecting any rate cuts, simply because if you look through the CPI, 2% is great, that's at their target, but there's underlying that there's service inflation, which is running around about 5.7%. So that is things like airfares, restaurants, all our service economy. So that's still quite high. And also just thinking the political angle, we've got an election coming up in a couple of weeks. The Bank of England doesn't want to be, I'd be very surprised if the Bank of England cut just before an election. So I think they're probably going to pause, and they won't be cutting today. There's no meeting in July, so then potentially August for the first sort of rate cuts for the Bank of England. But anyway, going back to the first quarter, there probably had been an expectation that maybe cuts would have come a bit sooner. But actually, because of the strength of the economy, they haven't had to do that. They can keep this tight monetary policy, and that goes across the piece. In terms of where returns have come from, the US has been very strong, clearly driven by AI and some of the tech stocks. So there is potential danger, a bit too concentrated in terms of return there. But really, that's sort of the key drivers. So then turning to the fund has a very large allocation to listed equities. And if you look over the last year, equities, just passive equities, returned about 20%. So having a large allocation of equities it helps. But then actually the underlying managers have also outperformed as well. So you've had that excellent strategic allocation to equities, it's worked well, but then also the managers delivered as well. So they've been really strong contributors. So that's kind of a nutshell of the past. In terms of future, I'm not going to say it's all rosy, because there's quite a lot of tension out there, lots of potentially geopolitics coming into play. We know we've got elections here, got elections in the US, we now have some elections in France as well. And what markets don't like is sort of surprise, things coming out that they're not expecting. So if things go as planned, I think we'll be okay, but you have seen that sort of challenge geopolitically, that shift to the right. So that's certainly something that could precipitate or catalyse some market reactions and volatility going forward. Coupled with, as I mentioned, monetary policy, rates are quite high at the minute, so that's obviously very restrictive to the economy. So central banks do have capacity to cut and help support economies, but I guess the danger is they leave it too long. We know it takes a bit of time for monetary policy to actually get through the cycle and actually get through to people and economies. So I guess there's a worry that they sit too long and cut a little bit too late and then are playing catch up, because we know there's always a lag with that, things and data. But overall, I think the fund's well diversified and has been doing well historically, and let's keep being diligent, and hopefully it'll continue in the future as well.
Andrew and Sandy, thank you. Questions from the panel? I'll take Leslie and then Farshad. Thank you.
looking at the 150% funding, I mean, as we head towards triennial for March 25, can we be cautiously optimistic? Because that's a huge leap from the 2022 funding position. Just wondering your thoughts.
That's a very good question, Leslie, and a very good observation. So members will know that in just under a year, we'll have another triennial valuation to come, and which is why whenever I say that funding position at 150, it's just at a point in time. That could drastically change, and a really good example was when we had the Liz Truss government in power. It literally shot up in favor of the fund. So it's just that position. The 2025, so 31st March 2025, that's the position we should be looking at, because that's what the actuary will be working to. Sandy made reference to that 8.1% annualized, right? The number that the actuary built in last time around was 4.3. So what is that equivalent of 4.3 come 31st March 2025 is what we should be focusing on. So you're absolutely right, Leslie. We should take a cautious approach to that. Let's not rest on our laurels. Okay, 4.3 is what the actuary built in and we've delivered 8.1, right? We need to see what that position is come March next year. We'll follow the same process. There'll be engagement between the actuary, the fund, and indeed, more importantly, all the employers of the fund. So in your instance, it'll be Kingston University, obviously Kingston Council, which forms a very big part of the fund. That consultation will take place over that 12-month period before we have to report back. Thank you, Chair.
Thank you, Adrian. Farshad.
I just wanted more clarity on the 8.1, but I'm not sure whether we should do it behind or not. So how much of it is FX? How much is different?
We can take the question, Councillor. We'll give you a response if there's a further follow-up, and if we think we need to go into part two, we'll defer to part two. But I think we can answer the question in part one.
Okay with me.
So your question is how much of that outperformance is to do with FX? Have I got that correct? So I'll give an initial response, and Sandy might want to jump in. So the starting point with regards to FX, the Kingston Fund, like pretty much... So the Kingston Fund, like pretty much all the LGPS funds, is a long-term investor. The assets that we currently have is 1.2 billion. I don't know what the value of the fund was 5 years ago, but I do know what the value of the fund was 4 years ago, because that's when I started. It was about just over 800 million, right? So the point I'm trying to make is, as a long-term investor, when it comes to FX, we assume a flat line. The question is, why do we assume a flat line? FX does this on a daily basis, on a monthly basis. We are looking over, as a minimum, a 20-year. We can't predict what's going to happen, and hence why we assume that flat line. That's reason number one. Reason number two, we are not a sophisticated investor. The team we have is, can I say, two and a half people looking after 1.2 billion. So we don't have the capacity in-house to do that. And hence why the approach from an FX perspective is you assume a flat line. Now, that's the assumption. How has it performed against that assumption? Well, obviously, the numbers speak for itself, but movements over the last 5 years would have at various points benefited the fund and at various points cost us some money. And it's at that point where I'll bring Sandy in, because he will probably know exactly when that happened.
Yes, I'll probably, if we could turn to page F13 of the report, if you're able to see the small sort of bottom chart which shows 5-year performance. I'm kind of focusing on the sort of the left-hand side of that, and this is sort of market index data. And if you look at global equity, the blue bar, which is sterling returns, that's an investor like ourselves investing overseas and not hedging any currency, is 12.1% per annum. If you look at the green, that's local currency, so that's if you could theoretically hedge perfectly, and that was 12.2. So in terms of FX impact, it's, as Adrian says, over the last 5 years, it's probably been fairly neutral over the whole 5-year period. Clearly, there will have been times when sterling would have strengthened, and then you would have been hit by that, and clearly the times when sterling weakened and you'd have been protected with your assets. But as Andrew said, over the long term, the actual impact on FX has probably been fairly minimal. Clearly, things have changed, strategy changed. You've invested in and out of things over those 5 years, so you might have done well, not well on the FX piece. But I suppose the key for me, if I look at the long-term equities, have been one of the key drivers of returns. This is market data I'm showing you there. Your managers actually performed, your two managers, Fidelity and Columbia Threadneedle, are close to 13%. Your equities are around very roughly 50% of your portfolio. So you think, okay, 13%, 50% of our portfolio is that, so kind of half that. So that's going to be a predominant driver of that 8% per annum is those equities, and predominantly from either capital growth from the equities, but also sort of income and revenue, rather than any real FX impact.
Thank you, Sandy. Any more questions from the panel? No, all good. The panel is therefore asked to note the report. Adrian, you're winking at me.
Initially, when I introduced the report, I said there was 3 points we'd like to make, which we covered, and 1 point in part 2. So with the chair's permission and the panel's permission, if we could go into part 2 just to...
Yep, happy to approve.
Kevin?
I'm sorry. We need to go into private session for the next item. I would ask the committee to agree to resolve that the press and public be excluded from the meeting on the basis that exempt information as defined in paragraph 3 of part 1 of Schedule 12A to the Local Government Act 1972 would be disclosed, and the public interest in maintaining the exemption outweighs the public interest in disclosing the information. Unless a colleague indicates otherwise, I will take that as agreed unanimously.
Agreed.
Agreed. Thank you. I'm not aware of any urgent items today. That concludes today's business. The time is 11:25 a.m. Thank you very much. See you again. Thank you for your time. Enjoy the rest of your day.
Thank you, Chair.